Welcome back, everyone, to the Audacious Money Witch channel, where we talk about investing and trading and a lot of fun things. Jim Cramer said no to China's Alibaba stock. It must be a good sign for Baba.
I have a quick question for you about slumping Alibaba. A lot of experts are recommending it now at these values. Just wondering if it's worth the risk.
Well, the experts always come out. They always recommend the stock. The stock then goes up 15 points, and then we get more suckers in. They lose a lot of money. I'm not playing that game. I say no to China.
There is always a bull market somewhere. My job is to help you find it. That's Jim Cramer's deal. At Audacious Money Witch, I help you find undervalued assets that are worth your money. As a contrarian investor, my job is to buy companies that are on sale for at least 40% off of its intrinsic value. Cramer is a legend. Jim missing Coinbase both ways is the best Jim thing ever. Coin stock now up 173% since he went bearish. Carvana is now nearly up 1,000% since Jim Cramer said it wasn't a buy 1 year ago. It's actually pretty impressive to be so wrong about almost everything you say, to the point where there's an entire Twitter community that is rallied around the idea of doing the exact opposite will be a win over the long period. What? So nobody's listening? Will Baba have the same Cramer's inverse blessing effect? Do you believe this is the bottom for Baba at 69 when Jim Cramer said no? Or you believe what he believes? Let me know in the comments section below. We will dig a little deeper with Baba and China in a bit. First, we need to examine the seawater. Has the sea changed in this new year? 2024's action has finally started for the market makers. First, we have U.S. inflation data coming in hotter than expected. Now we have Canada's inflation number from December came in hotter than expected. We are seeing TLT crashing back down again. As most people on YouTube are talking about Fed will cut rates this year.
Save this maybe in your notes because this has huge ramifications for the stock market. The Fed to start cutting rates mid-year in 2024 with a high chance of soft landing. Now, if look at this right here, okay? So this is where we're at with Fed funds rate right now, right around 5.3%. Now, at this time next year, this is what folks are expecting. They're expecting Fed funds rate to be 4.5%. That market has priced in about a 45% chance of a rate cut in March at the March meeting.
Let me know what you think in the comments section. As most people on YouTube are talking about the Fed will cut rates this year, the bond market seems to disagree. We are seeing 10-year bond yield going back up to 4% again. As Jim Cramer tweeted, bonds are rallying like crazy on January 12th and calling this bond rally unprecedented. It sounded like he is predicting a soft landing and Fed is going to cut rates.
Please put your tray tables up and your seat backs in their full upright positions. We're about to land the plane. We're landing on Wall Street. We hope you enjoy your ride on PAL Airlines, and we do hope you will travel with us again. Yep, Fed Chief Jay Powell has engineered the fabled soft landing. He's tamed outrageously high inflation without crashing the economy straight into the ground. They didn't even need to phone the runway. In fact, I bet most people won't even notice when the plane hits terra firma and the passengers will soon be on the jetway, with nobody thinking about how hard it was for the pilot to pull off such a smooth, soft landing. Nasdaq soaring 2.4%.
House of pleasure. But now, based on the trend of the TLT and the inflation data trend, it wasn't outside the realm of possibility that TIF, Maclam, and Canadian Central Bank could be forced to hike at some point between now and the summer. Get your bathing suit ready for another hike. Another Bank of Canada interest rate hike with the realm of possibility, with core measures of inflation stuck at the 3.5% range, and strong wage gains being generated in labor markets. There's a chance the dragon has not been slayed after all. It's not inconceivable at all, and he's been very clear about the fact that he might need to do this. The wall of worries has been already started to build again, while wars like the conflict in Gaza, Red Sea, and Russia's invasion of Ukraine have a human toll and disrupt supply chains. Supply chain disruption causes more inflation if you didn't join us in 2022. Get ready to pay more for your bread, your milk, your oranges, your apples, everything, gas. So far, all we have talking about is what's happening and what's going to happen in the West. I think now it's time to let China join in the conversation. Ted, what do you think? Oh, Ted thinks everything's going to go up. Oh, you're going to eat spaghetti again? Oh, he said he's ready to eat noodles again and spaghetti. Oh, you're going to get your bike out. The gas price. He says he's going to get his bike out. He doesn't want to pay the gas price anymore. Chinese Premier Li Qiang had a clear message on Tuesday for the business and political leaders gathered at the World Economic Forum. The world's second largest economy remains strong despite setbacks, and China is open for business. And not in that way. Li is the second highest ranking official in the Chinese government after Xi Jinping, and the most senior Chinese politician to visit Davos since Xi in 2017. The premier delivered a closely watched speech that promoted China's economy and targeted recent trade tensions. An apparent bid to win back the confidence of investors who have fled the country's markets in recent years. The effort appeared to include the disclosure of preliminary economic data covering Chinese gross domestic product growth in 2023, which had been scheduled for official release on Wednesday. Li said that China's economy was estimated to have grown by 5.2% last year, above the official's target of 5%, but still some of the slowest growth in decades. The Chinese economy can handle ups and downs in its performance. The overall trend of long-term growth will not change. Choosing investment in the Chinese market is not a risk, but an opportunity, Li said. He has reassured his public by saying that China's economy has rebounded and improved. He addressed concerns about China's shrinking population by saying that China's demographic dividend is turning into a talent dividend. And he also said that the number of people in the middle income group is going to double in the next decade. And so investing in China market is going to be an opportunity and not a risk, he said. No matter how the world situation changes, China is committed to keep opening its doors wider and wider to the world. State media has said that the aim of Premier Li's trip is to inject new growth momentum into the economy to promote global cooperation and a win-win outcomes. And this is coming after investors are taking money out of China. Many multinationals are spooked by what has happened. We will take active steps to address reasonable concerns of the global business community, meaning China is here to play nice. Speaking about China's 5.2% GDP growth in 2023, that's growing from a 3% growth in 2022. China's internet giants from Alibaba Group Holding slashed external investments last year amid an economic slowdown, regulatory headwinds, and geopolitical tensions, e-commerce giant Alibaba took part in 39 deals, a fall from 91 in 2021. 2021 was a watershed year for Chinese internet firms, as Beijing kicked off a campaign to rein in the disorderly expansion of capital amid a series of regulatory tightening moves. The country's internet champions, whose market sizes were once on par with their American counterparts, have virtually stopped expanding. China is the second largest economy. Economy has cycle. Worse become less worse, then it bottoms, and it becomes better. Alibaba, which is grappling with anemic consumer spending at home, made 4 investment deals in the e-commerce sector, 3 of them outside of China. AI was another investment favorite among Chinese tech giants last year, as they raced to build and promote their local rivals to ChatGPT. Alibaba backed 4 AI startups developing large language models, LLMs, the technology which underpins chatbots like ChatGPT, which can understand complex questions and give human-like responses. What? Last year, Alibaba's in-house research facility, Demo Academy, also launched a research laboratory to recruit more than 100 postdoctoral candidates to work on cutting-edge areas, including AI and semiconductors. Chinese internet giant Alibaba Group Holding put its technological prowess on display last week at CES 2024 in Las Vegas, where its respective artificial intelligence, AI, and live streaming e-commerce products set the tone for how they plan to embed themselves further into daily life in overseas markets. With advances in AI, we are ushering in the next generation of sourcing and empowering small businesses to succeed with our smart assistant at their side. Chris Liu, general manager at Alibaba.com North America, said, by putting generative AI at the center of its exhibition, Alibaba.com made it clear where it thought the platform's advantage lies. Chinese suppliers are also Alibaba.com's bread and butter. While it is ostensibly a global sourcing platform, the vast majority of companies on Alibaba.com are Chinese, which typically offer big cost advantages owing to the mainland's vast manufacturing supply chain. Even startups are trying to use AI to help companies navigate the changing landscape of e-commerce in the West. Canadian e-commerce firm Shopify, by operating their own sites, services like Spaceship make sense when making price comparisons on logistics solutions. Still, Spaceship does not have its own generated AI product yet to take on the likes of Alibaba. Jim Cramer said, don't touch Chinese stock, but if you would buy PDD stock back in May, you could 3x your money. Same will apply to Baba stocks soon. Alibaba is much bigger and stronger than PDD in terms of the number of daughter companies, dominant of the Chinese market and financially. The only problem is politics, but it will be solved soon. Lastly, Baba's valuation at 7.5 times forward PE, it's absurdly cheap. It's $85 billion of $170 billion in market cap and cash. It's a story where they are still growing 18% a year, and I think there's so much negativity around China even today. It's not about the China macro that's going to move this story. It's about the AI, data center, cloud, which is the future. What do you think about the future, Ted? Oh, Ted thinks he's going to get a girlfriend and she's going to be a robotic teddy bear. Really? You're going to marry a robotic teddy bear? Oh, she's going to cook and clean and talk to you? She's going to do everything? She's going to do everything, Ted said. Even do his investing. What are you going to do then, Ted? Oh, you're just going to sit and relax and watch Netflix? Oh, that sounds like a good plan. Oh, he said he's going to watch Netflix and eat popcorn. You're going to watch Netflix and you're going to chill on the couch and eat popcorn, he says. That's the future. It's a good future? Oh, yeah, Ted says. AI is going to be rocking this world.